I really enjoyed the discussion. I think this was great talk on next year, next couple years with AIP. We talked a lot about expectations in terms of AIP and scale and stuff like that. All right, welcome back everyone. In this video, we are going to be analyzing Palantir stock from multiple perspectives. I am thrilled to be joined by Felix and Arny.
Thanks so much, Jackson and Arny. Super excited to be here. Thanks for having me on. I run a little YouTube channel called Felix and Friends, and it's not purely Palantir, but a lot of other stuff. And I'm an options trader, which is also one thing I teach. It's sort of a passion of mine. I was a banker for a little bit and sort of just feel like we need to share education, really. That's kind of my ultimate goal here with all of it. But Palantir is a stock that's particularly, I'm a bit of a tech geek in a sense. So I love what they're doing from a technological point of view, and I haven't seen anyone else done something like that. That's kind of what got me hooked. And you know, the first time I bought Palantir shares, I think it was just dropping from 28 to 22. ARK had just bought in, and I was like, brilliant, this is it. Completely ignoring my rule of don't buy a falling knife. And now obviously didn't feel great for quite a while. And I think we should also touch upon a little bit of that today, like where are we with valuations and, you know, and all that kind of stuff. So super thrilled to be here. Thanks very much, Jackson.
Yeah, buying Palantir, you know, above the 20s, I think is probably something that many in the audience share, because that's when it really went mainstream for the first time. And so I think, you know, it's sort of a blessing in disguise to be able to study the company from that period to the extended drawdown, now back up again, which I'm excited to talk about today, as you said. And Arny, glad to be joined by you again. Let everyone know who you are if they're seeing you for the first time.
Thank you for joining me here again. I'm Arny. I'm a past, I can say also a bit of a banker, but mainly I worked as an analyst for a couple of years, after which I tried to build my own investment holding. I was not able to do that at that time, but since COVID, I'm essentially investing my own money, and I gradually started sharing content. And Palantir is that one stock that matched my interest as a creator, but more importantly, as an investor. I saw Palantir since before the DPO, starting following your videos at the moment where I was really interested. Okay, I want to understand more about this company, and I'm happy to share this long journey from the ups, from the downs, and it's amazing to be here after almost 4 years of this compounded knowledge, compounded story. We had the first, like the live stream that we made together in a moment of pain was actually my first live stream, and it was a Palantir therapy because it was needed in that time. And
it looks like that was back in May 2022. So I don't remember exactly where the stock was, but I think it was down something in the 80% range. And I think it was just a real test of confidence in the company, and it wasn't specific, right, to Palantir. And I know, Felix, you cover many other stocks on your channel as well, but I'd be interested to know, given your coverage of Palantir and others, how you sort of perceive Palantir retail investors relative to those of other companies. And is there anything unique you think you've seen in comment sections? I know I've seen a wide range of emotions, personalities, and so on. And I think there is a spectrum between those that get it at a very fundamental sense and those that are more in it for the fun of it. But I'd love to know, given we've seen such a roller coaster with the stock, what you've seen actually from your audience as well.
Right. Thanks, Jackson. I think the Palantir investor is, I think, bordering on the religious. I think there is that crowd, you know, who are just like, it's all brilliant no matter what happens. And I love the guy's dedication, but I always actually want to bring him back a little bit more into like the reality world, because sometimes, you know, they've done stuff that wasn't great. And I think we need to also be objective. So I kind of always think the danger when you become the real fan of a stock is you lose the objectivity. And at the end of the day, like, why do you invest? Why do you buy, say, Palantir stock? Because you want to make money, right? So that for me is always the primary driver. Is this something that can make me money with the lowest risk and highest potential return. Like for me, that's always kind of the equation. And, you know, look at, I don't know, Peter Thiel, how many shares did he sell? I don't know recently, but, you know, fairly sizable amount. Why is he doing that? Does he hate the business? You know, do you think it's over? No, of course not, but he's in it to make money. So he's got these rules. So what I'm kind of always trying to do with the audience is bring him back down to like, this is going to go nuts. It's going to have terrible moments and it's going to have amazing moments followed by terrible moments. And that's what the market is. And with something as kind of new and cutting edge and tech driven, it's going to happen a lot more. So I think I love that people have a longer term horizon. I think that's brilliant. But I think what we can do here, I think as sort of channels, is give people a little bit of realism, as in if you own Palantir right now, it'll probably drop 50% or more from the current share price. I would almost guarantee that at some point. And that doesn't mean it's going to be really, really bad for the company. It's just that's the way the market works, right? So I think if we can help people see beyond that and go, okay, I'm in a growth stock. This is going to be up and down 70% all the frickin' time. I'm cool with that. I can sleep well with that, then great. But if it gets people to a stage where, you know, they get angry and frustrated, which is just a sign of you got too much on this one thing, you know, like buy something else, like Microsoft's out there too, you know what I mean? That kind of thing. So I think it's the balance. And I think the danger with the Palantir community is because it is so kind of dedicated and so believes in this product, which I do too, by the way. But, you know, I wouldn't put 100% of my money on anything ever because weird stuff can happen, right? Enron can happen, you know, stuff like that knocks things out. So I think I love the audience. I love the community. I think people are digging deeper into the pretty complicated product that this company makes than pretty much anything else I've seen out there. And that's one of the parts I really enjoy, that people are happy if you make a 15-minute video on something freaking technical, they will actually watch it and enjoy it, and they'll give you some good feedback on it. So that's kind of the way I see it. I don't know. What about you guys? What about Arny?
I believe there are two sides of the coin. On one side, as you mentioned, the depth that the community is able to emerge, like their valuable insights that are able to visualize and say, look, this information is actually very valuable. Hey, watch out. Like Wall Street is not paying attention to the real story unfolding. That is very valuable. But on the flip side, as you mentioned, the risk is becoming dogmatic. And that is where essentially you really start having a financial risk. And that is what happened also with Tesla back in 2021. From outside, since I wanted to have Tesla, but I didn't have it because I couldn't really understand the valuation. But it was clear to me, look, these people are dogmatic right now. They're not really elaborating things. And this from smaller followers, but also to big audience people. Like even the biggest influencers were talking about 50% CAGR revenue for the infinite, for having 30% margins. It's like, wait a second. Are you really realizing what are the implications of these assumptions? And that was too much. So I believe let's put it this way, the cultish component is not bad per se. If it is able to make emerge valuable information, it becomes bad the moment it becomes dogmatism, meaning you believe whatever thing that confirms your bullish sign. So I believe this part of community investing, let's call it this way, is very powerful, but at the same time very dangerous if you don't have this mechanism of, as you said, people like keeping people grounded to what's the reality. Because as the stock moves, there is immediately the expectation, oh, now we go 2x, 3x, 10x in 1 year. You also, for instance, every Palantir spike of 5%, you start to see in the comments, Palantir to 50. It's like, I hope, but that's not how really things go. So I'm happy if it happens, but I'm more happy if it happens for good reasons backed by the business. That's why I think we can really help people understand the context so that they can assess if the stock moves actually in line with the business evolving. You don't want the stock go parabolic without business substance, unless you're a trader. Like if you're a pure trader, you're just happy for the buck and bye-bye.
I think you make a really good point that retail investors like you and me, we have an advantage over Wall Street, right? We often spot trends, new products, new technology earlier because we haven't got our head up our own backside. So Tesla is a great example of that, right? It was the retail crowd that actually discovered this sooner. And they're like, this is actually a great product. This is really amazing. And I feel this is similar with Palantir in that sense, that we will sit and we will watch, a demo day, which is pretty technical. And we'll go, there are all these leaders at companies and they're going, this is amazing. We've tried this for 10 years and now it works in 8 minutes. And the Wall Street guys, the analysts aren't watching because they haven't seen great profitability margins or any of that, this sort of spreadsheet approach that they look at. So they just go, ignore it. It's some weird hype Reddit stock. So I think that's where the advantage is. Yeah. But as you say, like the danger is then that we take our enthusiasm too far and we go, oh, it's only trading at $30. It's a bargain. It's going to go to 100 next month. And it probably won't, it'll take longer.
Yeah. Yeah, I definitely agree with what you both said. I think that, in my opinion, there's some of the best, most dedicated people researching the stock in terms of retail investors that you'll find. And yeah, I mean, they're involved in other communities as well. And you see that interest and that passion and knowledge. But at the same time, I think sort of along the same lines, there are, I think, maybe more retail investors that are involved in groupthink that probably weren't thinking about Palantir when it was back below 10, but are now thinking about it now that it's recovered 200%. And I think that's just like behavioral, just a behavioral
FOMO,
factor.
isn't it?
Yeah, FOMO, greed, or whatever you want to call it. And I think that's sort of what you guys are saying with the ability for retail to outperform. It goes both ways. You have behavioral advantages where you're not limited on quarterly performance, but at the same time that might hurt you if you're, being overextended in a certain way. So I think all of that makes sense. And I wanted to maybe talk about what you were saying a few moments ago, Felix, about the whole 50% drawdown. I personally am not sure like what would get the stock to draw down 50% at this point, but that's the exact reason that it's important to talk about, because it's not for the reason that you think it would happen. It's for why you're unsure it would happen. And so I want to talk about, maybe because Palantir's been buoyed so much by the AI wave, as they say, and I think Palantir's valuation of $25 per share has a good amount to do with the macro, essentially, or the industry itself and how much it's risen. So I think maybe if we're talking about what could cause Palantir stock to maybe not fall 50%, although that's certainly happened in the past, but take a major correction from where it is currently, would be less to do with the company itself. And certainly there are risks, but maybe more with the macro, which people might overlook. And of course, this is going to be very cyclical. It's not just going to be up and to the right, even as powerful as AI is and will continue to be. But I don't know if you guys have any thoughts about what specifically could cause a drawdown, because I think it is a very good reminder.
We always like to forget the bad news, and that's the way our brains are programmed, right? There is actually something in there that makes us forget bad stuff, because otherwise we'd be really miserable. But with markets, that's kind of a bad thing. And COVID, right? Did you foresee that? Market, everything drops 30%. And what drops the most in a panic? And it could be, massive fraud at JP Morgan or something tomorrow, whatever. It could be something unforeseen that shakes the confidence in the market. That's all it's got to be. So it doesn't even have to be a major recession or something like that, but something major. It could be, something in the real world. I don't know, power grid goes offline in the US for 24 hours, like whatever it would be, the market would massively crash. And those things do happen with every sort of couple of years, pretty much inevitable. Look at a stock chart. It's just, again, the way stock charts are made is unfortunate because the dips look smaller over time, right? But they were actually a massive event at the time. So if that happens, where are investors going to pull their money? the things perceived as most risky. So companies that are barely profitable, companies that are part of the latest thing, which is AI, tech companies, and they're going to pull it out of there and they're going to stick it into Microsoft or into Apple or Google because they're sitting on 100 billions of cash, or they're just going to buy bonds or something that feels really, really safe. So I'm not saying that's going to happen this year or, whatever, but it'll happen. And no market has ever gone up in a straight line. Look at the stock chart. I mean, we were at $14 and a bit in middle of last year. I would not be surprised if we don't go back there and revisit it and then go back up. I think people always think just because it comes down and can't go back up, but look at the chart. Like we were at $6 or something last time we had one of these conversations, and before that we were in the 30s. So this is going to keep happening, and the more zigzaggy a stock chart is, the more likely it is to continue to do that, I'd say. I mean, look at PayPal, right? That was a $300 stock. It's trading at $60 and a bit. And that's a profitable business with free cash flow and a ton of money and a huge user base. So just don't think that stuff moves in a straight line. And therefore the horizon of investors, I think, needs to be stretched. Like someone messaged me today on a comment and said, Felix, what's a great stock for the short term? There is no great stock for the short term. There just isn't, Okay, become a trader, different story. But if you're just buying and holding, like you need that horizon. You need to see out the AI bubble will pop. And then there'll be the survivors and they'll make money. And then it'll recover because it's genius. But we are going to go through that moment. So unless you can hold through that moment and maybe buy through that moment, you're in sucker's land. You're basically just handing money over to your broker and they make fees out of it.
Yeah, totally. In my last video, I was talking about how I think Palantir is uniquely, I wouldn't, at risk sounds a bit extreme, but I think over the course of the next year, potentially through the end of 2024, before the financials of their new product AIP really come in, it's baked into the multiple, but it's not showing in the income statement. And that's because of the sales cycle, right? And because of there's all this interest and they're deferring some of the actual sales in terms of money exchanged for the product. And that's how they're choosing to do things with their boot camps. They're getting the product out there before they're actually collecting the revenue. And so what I'm saying is, I think with the multiple, as high as it is, there's certainly a case to be made that you can buy it and the stock can still go up. But at the same time, I think it's a unique opportunity for the shorts that really hate the company and anyone that wants to, take some gains. I'm talking like institutionally, and maybe take a step back from the stock, because you've seen a lot of benefit from that rise, as we've talked about. That's less about what they've presently generated in their cash flows. As you're saying, it's like businesses in a drawdown that are most susceptible to a large drop in the price would be those that aren't actually earning as much. And so I think Palantir is going to cross that chasm in 2025 or so, and I believe 2025 is going to be the pivotal year for the stock. But I wouldn't at all be surprised if something bad happens. We don't know really, where the stock could see a drawdown before we really start seeing those numbers in the financials. I think it's important to make that distinction between, what's being valued into the stock versus what have they actually earned from a business perspective. But I think they're very close to a period where the financials are going to be very solidified, and it's going to be hard to take that away from them, essentially. So I'd love to know, maybe Arny, yeah, go ahead, Felix.
Sorry to chop in there for a second. I mean, finances have improved, but I think the mindset of Palantir management and founders is that of a venture capitalist. So they're running it like a startup. And if you've got lots of funding, what do you do with a startup? You give your product away for free and you try to get as many people as possible to use it, and then you figure out how to charge for it, right? And even though this company's been around for quite a few years, they still are in that mindset. And it's a mindset that Wall Street hates, because analysts can't put a spreadsheet together on it. They can't figure out what's the value of these people signed up who are not paying anything. So I wouldn't be surprised if they don't do this for longer than we think. Honestly, I would not be surprised if in 2025 they don't come out and go, we've got the most amazing upgrade to our product and we're giving it away for everybody for free. And maybe their horizon is 2030 or something. I don't know, but it reminds me a little bit of, remember Amazon 2015, something like that? And everyone was saying they're going to go bankrupt. They weren't making any money. They were just building infrastructure. Walmart was going to kill them, right? Those were their headlines. And it's just founder-led businesses. They have a longer planning horizon. They do not care about the now. Look at Elon now, right? He doesn't care about right now. He's got some vision of what's going to happen in 5 years. And so I would just also put that out there as a bit of a warning to people. You got to have that patience. But sorry, I cut you off. You wanted to ask Arny something.
No,
Yeah, that's great. Arny, what did you think about this?
I was thinking we deal with pure uncertainty when investing, and especially in a company like Palantir, where it is, even if we know, broadly speaking, the direction, when we think into a shorter term, it is very hard to understand how things develop. So I was asking myself, okay, what are the things that we know for sure? And then we reason around them. And I was thinking about 3 things, and actually Felix added a 4th great point. My first thinking is the multiples, the valuation multiples right now are expensive. This doesn't mean undervalued, overvalued, but that's another topic. Like in a normal scale, range scale of multiples, when you start talking about 20x revenues, 50, 60 times free cash flow, those are multiples in the expensive range. The second thing is how you mentioned, we see the fundamentals evolving in a great way, especially backed by the bootcamps, yet the full effect of the bootcamps are not really entering the numbers yet. We have seen so far a lot of margin expansion, and the analyst expectations were increasing, especially on the margin side, while the expectations for the revenue are still around 20% for the coming years. So there are still no real positive expectations, like massive expectations from analysts. And the third point is, as you mentioned, short sellers hate the stock. A company like Palantir, like Tesla, is that kind of company where or you love it, as us, or you hate it, as most people that from outside look at the financials, they say 20% growth, that's not really that appealing. Yes, they are now profitable, but look at the past, it sucks. And while I was eating, I had this thought that I would bring also to you. Imagine you are an investor. You spend 10 years of studying how to invest. And in order to maximize the efficacy of your investment studies, you don't just buy an old and you wait for 10 years. But you make a lot of experiments. You really try to understand how things work, studying Buffett, studying trading, studying almost everything. But with the idea, after the 10th year, I'm ready to be a full investor because I studied more or less everything, but I developed my own way of thinking. And my way of thinking makes me a very good investor, but only after 10 years. So if you look at the track record, you would see a lot of stuff that make no sense, returns that are just okay. But what if, for real, at the end of the 10th year, you're actually a Warren Buffett level of investor? If you look at it from the lenses of a financial analyst, you will say, you suck. You are not a good investor. And that's the lenses with which short sellers would look at that. But if you actually follow the story very closely, you see the compounded knowledge, you see the reasoning that goes improving, and you start seeing how valuable are the moves once after the 10th year, you start really playing your real game. That is a completely different perspective. So I think this is the difference from what we see from analyzing the company very closely. And we have to say, when Palantir went listed, objectively, its financial numbers were trash. Burning cash, a lot of dilution. And now it's the complete opposite. Yet you can't really remove that past away from the lenses of how financial analysts think of the world, which is very anchored to the past, and then they need a narrative. We are so close to the company that we always evaluate the present in the evolution of the present. So that's why we pay a lot of attention to things like AIP now, because we realize that this single thing can create a change in the dynamic of the business. This to say, this example of the 10-year investor helps us understand the different perspective. Short sellers, how they reason, they just see an expensive stock, they short. And then there's the fourth point that Felix brought is if it was a normal company, they would have just search for linearity in the business, meaning that at this point would just seek, okay, let's keep growing, let's keep margins in a way that Wall Street is happy, clients are happy, everyone is happy, and we just keep compounding. But since we are dealing with a company that reasons in power laws, it is very likely that the cash they are building right now is like preparation for a wild move. Peter Thiel is a chess master. Elon Musk is a chess master. So when we see these companies making these weird moves, there is a reason behind it. And reasoning, and I thought I had while listening to Felix is now Elon Musk is dropping FSD V12 for trial for 1 month. What are the short-term implications for that? That's a cost, no revenues. Yeah. That's a massive way. It's like I press the button of now I seek virality, pure virality. How Palantir could do potentially that? Exactly how Felix said. We have 4 billion cash. We don't really need this cash to operate because we are very free cash flow positive. Potentially, the moment we see opportune, we can press this button and say, okay, now foundry free for everyone for 6 months. Boom.
Yeah.
Maybe it's not illegal, but that's the idea.
Yeah, so a lot of thoughts there from me. I think, one thing on the whole short topic that I really liked from a comment that I saw is every share sold short is a future buy, right? It has to be. You're not gonna hold it. I mean, you certainly could try and hold it to zero, but you're paying interest on the shares you're borrowing. So it's just an interesting reframing is once you have, however many shares held short, they're gonna have to get covered eventually. Now they could get shorted again, but it's just interesting dynamic, right? It's like time is against you when you're shorting a stock. That's why it's so difficult. And certainly I don't.
But just look at the headline. What's the PE now? 110 or something stupid, right?
Yeah.
That's the sort of thing that pops up on the list of somebody who wants to short, right? They go out, they look at, is it profitable? Yeah, but it's a couple of cents, EPS, dilution, and then they go, okay, let's go for it. And you see that with positioning, like, I mean, looking at it like right now, like at $25, basically, there's a huge amount of selling going to happen. Like that's just where the options sit, right? So it's just people know it's hard for this to go up. So I think if it drops below 22, yeah, you're gonna see a serious drop basically. So you got support at 22, resistance at 25. There's a short term, right? But so if you go below 22, then the short guys are gonna really go nuts and drive this thing down. But does it matter in the long run, right? I mean, I like it when good companies get cheaper. Like I do. I just think like Tesla, to me, I like the stock more than at any point in the last 2 years because it's cheaper and it's better and the market hates it. And that's the moment when you should think, well, let me think about this. Let me dig deeper into this, right? The FOMO buying, someone again wrote to me yesterday and said, oh, I regret selling NVIDIA at 300. I'm going to sell a bunch of other things now. Do you think I should now buy NVIDIA? And it's just like, why? Why is that the only thing you can buy out there, right? Just when it's trading at whatever it's trading at. So look for bargains. And I think if you can come up with that mindset and maybe write it down, like what's your methodology? Like what Arny is saying, right? You study to learn to get better. What's your system? What's your methodology for selecting stocks? Once you write that out, I think it helps us do the stupid stuff of buying at the top and selling at the bottom, which is what most people sadly still do.
Yeah, and I think like you should want to, like as a Palantir investor, you should want to buy Palantir at $18 again. Like you don't know when that might happen, but you should certainly want to. And back on what you were saying, Arny, about the financials from the DPO, the listing, September 2020. I know you're saying like their cash position was probably a fraction of what it is now, and the margins weren't as good, but they were growing at 40%, I believe, or for a very, brief period of time, they had that very strong growth. So it's almost flipped where their margins have expanded significantly, but their growth has gone down to 20%, which it's still very impressive that a business is able to grow at 20% at their scale. But at the same time, it's like it's a software company. Investors have certain demands. They've promised large growth in the past. So there are a lot of problems with a 20% growth rate. And what I would say is that we're seeing a segmentation in the business between what's growing faster and what's growing slower and holding the business back. And the US commercial certainly is pushing above that 20%, but the rest of the business is sort of holding them back a bit on the government side. And in Europe, their business there is really slowed down. So it's a bit unfortunate that not everything is happening all at once, but that provides an opportunity where it's getting masked. Their commercial advantage is getting masked a bit overall, I would say.
Plus, they're giving it away.
Yeah, yeah. And I also want to sort of what you're saying, Felix, about and Arny about, potentially extending their offerings for free and deferring the revenues. Essentially, I would love to know what you guys think about how best Palantir could retrain Wall Street in a way. And Felix, you mentioned Amazon. They did a great job of saying, hey, we're going to defer profits as much as possible. You just have to believe us on that. We're going to, lose money for a very long time. Now that Palantir is profitable, I don't think they're going to start losing money. But essentially, if they could retrain Wall Street and analysts to understand the story is not around our revenues at this moment, it's more around how many customers we can get and retain. And eventually, we're going to monetize them into the future. I think that would be a very interesting point. And I think retail certainly is very focused on the customer count that they publish every quarter. But I think Wall Street, quarterly reports, we want to see what is the revenue? Did they miss? Did they beat? And it's very, I think, linear on a quarterly basis from the revenue standpoint. So I don't know if you think this is something they could essentially teach to everyone because they have such a long-term mindset with an owner's mentality. And
I think if you look at like how do Wall Street banks put a value on stocks? There is an analyst sitting there in a cubicle somewhere, and he's got to fill in a spreadsheet. And he needs revenue, he needs margins and growth, and he needs to project growth. Not of some customer account number, because that doesn't go into the metric, but of revenue and of margins, essentially. And then he multiplies that by whatever figure because he thinks the industry is worth something like that. If you don't give him higher revenue numbers, if you don't give him higher growth numbers or higher margin numbers, he's going to give you a really shitty valuation because that's the only thing his system is allowed to do. If he makes it up, he's going to get fired. Now, there are exceptions to that. And that is if something like NVIDIA runs through, $1,000, banks don't like to be left behind and look like an idiot. So they will revise their numbers up and they'll come up with some weird excuse for doing it. But that's just making it up. And analysts tend to follow the market, right? They move it up and down with where the market pricing is. But you're not going to revise them. And if you look at Amazon, people hated Amazon stock. Wall Street absolutely loathed it. They said, you're going to go bankrupt. You're going to go out of business. And what Bezos came up with eventually was that he would do one profitable quarter a year. He would burn money for 3 quarters. He would slow down the investment tap, usually in the last quarter of the year, just to show we could make money if we wanted to. And that's a little bit how he challenged Wall Street and sort of said, we're not actually a really bad business. We just are investing. I don't think you're going to retrain these guys. I think that's just the way it is. And from our point of view, I think that's what I was saying earlier, the retail advantage is that we don't need to justify our bonus at the end of the year with a certain performance. So we can hold through these periods and we can buy in periods where people hate stocks. So I think that's, in a way, it's good for us. It works.
Meanwhile, developing conviction, because when we deal with such a volatile stock, such a hooked stock, it is easy to get trapped into when it drops. Oh, the analyst says is a gradually expensive, so now I must sell. No, like it is the other way around. If you're really aware of what you're doing, you just see that drop as an opportunity, because that drop is an asymmetrical opportunity. If the business is going well, and by studying the company closely, you realize the business is actually going well. Think of, for instance, not only the number of boot camps they have been doing in the last months, the number of boot camps is increasing. And now with AIP now, they have even a portal to essentially make boot camps in remote. So with like these developments create a massive advantage. And for instance, AIP now is that single factor that potentially could change the trajectory of the company. Wall Street has not written a single line on that. As the moment they published that, like we as a Twitter community mainly, and then on YouTube, like we went super excited. We noticed that even the employees are super excited, as if this is the most important release ever. Yet not a single line from a Wall Street analyst. So this means we need to be really aware that the business is not the stock. And as investors, we need to capture the opportunity where the stock goes down stupidly, but we know the business is evolving in the right direction.
Yeah, and you want to know what's funny, Arny, is the AIP Now announcement, which is not, it's not itself a new product like we've known of AIP, but the extension of it and the platform they're creating and the marketplace, essentially, they didn't issue a press release. So analysts are going to have no idea that this even exists, right? Because very formulaic is they're following so many companies at the same time. They're not on Twitter following the Palantir employees and seeing the chatter there. I think it was an interesting choice by Palantir Comms not to issue a press release. I was actually pretty surprised because there is marketing behind it, like a new name, AIP Now, like this is something new, but they chose not to really advertise it, and I wonder why, essentially. But
I was going to ask you.
Yeah, I'm not sure. I tagged Lisa Gordon, tried to get them to do something, but they didn't. So
see why they think that. I mean, maybe they just don't care. And I think in a way that's a healthy thing. If you want to invest in a founder-led business, you actually want them to really not care about the share price. I think that's probably the healthiest thing for a founder to do. Just build a great product and the people will come. I mean, Karp talked about this, what, like 2-3 years ago, the modularization of, foundry. And I couldn't quite figure out how that would work. You see AIP now and you're like, okay, so I can just click a button and I get it. It's already there, like a plugin basically. So yeah, I think it's amazing. I think it's a huge thing but again, Wall Street isn't going to care because they're not charging people for it. So it's going to have zero impact on revenue for the next couple of quarters. And that's all Wall Street cares about. So until they come out and say in January 2025, we will charge people for AIP now X amount, that's when the analyst is going to change that number in his spreadsheet. And that's when the stock becomes worth more, from their point of view. Until then, it's just hot air from the Wall Street point of view.
As a former analyst, I can really relate to what you mentioned previously, that what analysts need to anchor are metrics, because those are more justifiable to clients, to your boss, to whatever. So if you say, okay, this is the past revenue, this is also what other analysts expect, boom. Exposing yourself to having a divergent opinion from the consensus is very, very hard to make. You can maybe do it once you are Danivs, very established, so that you can put out your mind. But as a regular analyst in a bank, you have a higher risk from being wrong against the consensus rather than the upside you have for being right. And once you, let's say, if your report gravitates toward metrics, that is easily to justify. If you say, okay, the revenues are now not that strong, but trust me, the number of customers they're acquiring, the quality of the customers they're acquiring, they will pay a lot. if that doesn't really happen, your boss doesn't justify you, your clients, so the funds don't justify you, while on the metrics, that is more easy to forgive. So we need to think, as investors, we are skin in the game, we have the risk of losing money, therefore our life is on the line. As analyst, your job is to preserve the job. If your job were to invest, you would not write reports for a living, you would invest. So your job, so your risk is a career risk. And you will try to make choices, writing reports, in a way that preserve your job.
I think that's really well put, Arny. And I think also, like, you don't have 5 years to prove the case. You usually have the year till your next bonus or your next promotion, and you want to get that promotion. So you have a 1 to 2 year time frame. Usually, most bankers do, and so you don't have the luxury of going, but in 5 or 10 years, this will be amazing. This is just not part of your conversation, right? Because you'll get fired before then. And so therefore, yeah, you got to stick to the numbers. So that's what it is.
Yeah, totally. And it's almost funny the way that Karp is talking about these things with AIP. And so when he's asked by Bloomberg, how are you going to monetize it? What's your plan? And he's like, I have no idea. We're going to figure it out along the way. And he's uniquely in that position to be able to give an answer like that, which I think normally you would expect your CEO to be a little more on top of things.
He can't get fired. He's got his 8 shares or whatever they're called. He can't get fired. That's the unique. And that's why, in my view, they are building the best product out there, because nobody else has that luxury to build the best product. Everybody else has to bring, look at Adobe, right? Got killed because they didn't monetize AI as well as people were expecting. 1 quarter. I mean, you know, the AI thing is what, 6 months old in a sense, as a Wall Street story. So they gave him 6 months and then they kill him. So Wall Street's brutal in the short term.
Yeah. Yeah. And I think you want your management to have that commitment where they know they're not going to sink so much time and effort into this and get kicked out if they have a mentality that is longer than what the shareholders essentially want. And so I think it's definitely unique to Palantir in the sense that I know other companies have these F shares and dual class structures, but I think Palantir, with what they're doing, is definitely unique. And I think what they eventually want to get to is pricing related to like a percentage of value generated, which is going to allow them to have much more upside, and it's a win-win essentially. But it's so difficult to like know what that's going to be like until it actually happens. So I think they have to do the free offering upfront and then sort of figure out, but I don't know, is it 5% of the value? Is it 1%? Is it like how much? Is it 50%? Because if you're getting 100% increase, you'd be happy to pay 50%. Like it's gonna take a while, I think, for them to know exactly what works. And I don't know,
But,
Felix, to your point about, if you were just saying it's like, it would be great if they tell us, oh, it's going to be like this, but I don't know if it's going to be fixed. I would actually think maybe they have different contracts with different companies as well.
Yeah. But again, if you go back, I mean, ask Arny, like, think about the analyst, try to put that on a spreadsheet, try to model that. They're going to charge everybody something else on some mythical value possibly created at some point in the future. Analysts are just going to go, this sucks. I'm going to go home. I'm going to just come up with a number that everybody else has. That way I'm not terribly wrong. I won't get fired. And I'm going to move on to a stock that I can actually do something with. Because it's just, I mean, it's up in the air. Yeah,
even for us, trying to think to the answer. We know now the financials are improving. The growth is improving. The margins are improving. Back to boot camps, they released a guidance of around 20% growth with around 30% margins. Analysts now expect for the future 20% growth and 30% margins. For essentially, they extrapolated the next guidance. They extrapolated it for 2025, 2026. So the question, for instance, I have that I would be really curious of your point is, are these the numbers that reflect the full potential of Palantir? What are what is the full potential of the numbers that we could see from Palantir if actually this AIP takes traction, if AIP now also further helps the business.
Yeah, Felix, what do you think? Because I talked with Arny before about potential long-run margins and how they announced in 2020 their margin goals, and they've since actually achieved them. And so they were supposed to be long-run targets, but they already have them. And so the at least operating margin and so on, they're ahead of target on those, but the growth rate is leaves a bit to be desired. So I think maybe first, do you think that Palantir's what is it, Arny, 35% EBIT margin or something like that is a, you know, is very, very similar to, you know, the best in software, I would say. And so the question is like, is that going to expand, or are they going to use that to potentially finance their growth into the future? It's like, it's an interesting point in Palantir's history because, as we've said, like they're very mature, 20 years old or whatever as a company. But at the same time, like the hope is that their growth in terms of their, you know, customers, as we've been saying, and their new products is yet to come, but their financials in terms of their margins, like software, right, 80-85% gross margin, and they're already turning a profit, although it's very small. And so, yeah, the question is like, where does it go from here on a margins basis?
I mean, I think, you know, I always look at gross margins. For me, that's always like the kind of the moat indicator. Like, if you're a software company, you should have an 80% gross margin. If you don't have that, you're doing something wrong. So Palantir is in that space. They've got an 80%. It's like, you know, Microsoft has an 80% gross margin. All good businesses basically do. So they're doing that right. To push that up a lot more is quite hard, actually, just because you're just overcharging your customers, essentially. But they are voluntarily not creating the revenue growth. I think they could create more revenue growth now. But as you said, they're foregoing it because they think there's something more better coming down the road. And if you look at AI adoption in the real world, is at like 0.1% of what it will be. Like almost no company genuinely uses AI in their business. Okay, they put it on, did you see that post on Costco? You can buy toothbrushes with AI in it. You know, they're using it for marketing gimmicks, and we can generate pretty pictures and that kind of stuff. But almost no business out there is actually running their business with AI. So the adoption of new technology takes way longer than people think. We get really excited by it, and we think it's going to do this one little thing, but it's actually going to take 10 years, and it's going to do way, way, way more. So if you've got money, which Palantir does, right? They've got free cash flow. So there's no rush, basically. You are controlled by your founders, who are relaxed people who don't need to have a huge payday tomorrow. Then why wouldn't you just sit out this curve, the adoption curve, give away your product for free, become this kind of operating system of data, and start cashing in when it becomes a more mature market? So that could be in 5 years. It could be in 10 years. So this story might, I think, potentially frustrate Wall Street tremendously, because they're not going to generate, I think they're quite happy to generate 20% revenue growth. And they're just saying, get off our backs. We're just doing that with the baseline existing commercial business, government business. That's just going to bring us 20%. It's easy. But we are not going to slow down our growth in the future and our future profits because you idiots need to fill in spreadsheets and want to show higher returns. So if you're a long-term investor, you know, like how much of Karp's money is in Palantir, right? A lot. You would just do that. You'd be like, I'll just work an extra 7, 8, 10 years, and I'm going to generate that many more billions than if I did it right now. So I think it's a smart thing to do. It's just, as I said, Wall Street's going to hate it.
Do you think that is the incentive and what they try to pursue, or there could be another way? Like I don't know the answer. I'm here to try to reason as well. There could be an incentive to actually do the other side. Like now they are taking traction. Maybe now is the time to show that Palantir is a successful story, as Snowflake was in the past year. In the past years with a cloud adoption, with a warehouse adoption. So once you start being perceived as the successful player into that market, then you automatically become the leader in that market because you are perceived as the market leader, so that new potential clients say, oh, I don't want to go to an average company. I want Palantir. And I think the moment when customers, also consultants, start thinking, we want Palantir, and the consultants say, see, clients want Palantir and not another solution. That is where you become the standard and where essentially you create this massive client adoption, which eventually bring revenue. So my question is, what could be the incentive to play the what's called the sandbagging game, rather than now doing the opposite, the show-off game? What could be the incentive on one side or the other?
You mean the show of revenue?
Yeah, I mean, show off meaning, okay, now we show that we beat completely the estimates. We go, rather than growing, we say 20% and then boom, we slap a 40% growth so that people take notice and say, wow, this thing is really rolling. Now we need to get a Palantir 2 before our competitors do.
Yeah.
We are playing...
I think attracting great staff, because staff go to Palantir for the share options, right? Anybody in tech goes to the company where they think the stock's going to have the most upside. So you can look at that in two ways. Actually, a low stock price for a little while is great, because people feel like, oh, if I now start working at Palantir, I'm going to get this massive upside. But at some point, people get frustrated and you're going to have to do something about it. So I think that's probably, from my point of view, the employees could be the incentive to, at some point, light the fuse and actually let the stock price go up.
Or maybe I have another question. What if we are actually assisting to this story in two times? Like, so far, we have been seeing the sandbagging game where Palantir was not really pushing too much. And now with AIP, they do have a reason to push and to show off a lot, so that they create this feedback loop of the narrative that becomes also reality, because they internally know how valuable they are. They incentivized because of the stocks appreciating. And from outside, they are perceived as a very strong company right now. I'm making the comparison with Snowflake, which went from a glory story to now they are behind AI, they're changing CEO. It's like, it was very cool, but now they broke the trust of Wall Street. And maybe also for the business.
I was also trading at 120 times PE or something.
Yeah,
a bit like where Palantir is right now. So be careful if you're a short-term, investor.
But now, if you look at Palantir, both from a business point and a stock point, I would say now it is a successful story emerging. So from the management incentive, I would think, oh, now we are perceived in a different way. I would try to push as much as I can so that my perception becomes a reality, because now it is really where you already have a solid base of customers, like leading customers, and you really want to achieve the biggest number of clients possible. It's like, if we think as if it was Facebook, once you have like the very big cluster of users that are really in love with a platform, they use it a lot, the moment after that is just to spread. And I think we are in that phase right now. We have already the first basket of customers that are very close, the leaders that already adopted Palantir. Now it's just 1 to N. And to push that 1 to N, you need to be perceived as who cares about all the other socials? There is Facebook, which is the number one. And I think you, as a management, as personally, like I would push on that narrative. We are the only one.
Yeah, I think a lot of, I guess just to answer your question in my thought process, I think they are demonstrating their market leadership with their AIP con events, right? And they're bringing all of these customers, they have the customers tell the story, which I think is very powerful. And while they aren't, as we've said, having the revenues right now, I think the number of customers, while that's not immediately what Wall Street cares about, is one way of saying, market share, market leadership. And so to your point is like, could they pull some of that forward just to slam the fist on the table and say, like, look at what we're doing. They could, yeah, like Alex Karp loves to do on the conference calls, but they could do, instead of like a free offering, like a very discounted or very, reduced cost offering. So like instead of a free trial, like a $1 trial or something like that. And so that's where they could say, it's like, hey, we have 500 customers that are on it for free. Going forward, we're not going to make you, pay anything significant, but we're going to make you pay. So like, I think there are ways that they could pull some of that forward rather than pushing away customers with the full cost that they're eventually going to get to. So I think there are ways of doing it, but I would say my opinion is that they don't care about the quarterly results, and they're very much, attuned to what the business is going to do. They use Palantir products internally, which is why they're always so, their guidance is always, pretty accurate. And that's, partly to do with how consistent the contracts are. So there's generally not massive fluctuations. Now, if they lose like a big government contract or something out of the blue, that's definitely a risk. But I think quarterly, I still don't think like massive increases in revenue are going to be something that's going to happen anytime soon. I think that might be like 5 or even more quarters away, whenever they start to monetize AIP, which, as we've said, could take a long time. So I don't know. They're certainly not marketing focused. And like maybe if there's a way that they could demonstrate more market leadership, I think, part of what it is Alex Karp just going on all of these interviews and bragging about how good the product is and how, confident they are in what they're doing. And I think that's a form of confidence in their marketability, essentially.
I think what you said about getting the customers to tell the world how great these products are, I think that's the ultimate, because Karp comes across as a bit of a loon, right? If you put him on Main Street TV, I don't think he's necessarily going to change people's minds that much. And if you look at their press releases, it's pretty much all, we just got the deal with Babco or this retailer or that company. And that's who they care about, right? They care about their industry and the CEOs in that industry. So I think they're marketing not to investors, not to Wall Street, not to the world at large, but to specific industries and the people you could potentially be customers in that. And that's actually what you want them to be doing. I mean, the whole investor relations thing and stuff, it's just a complete waste of time, really, right? Like, what does it matter? Just build a really great product and show us down the road you're going to have the revenue and the margins, and we'll all be happy. So I think if they could, the trouble with the AIP cons is they're amazing for people who are in this space, but it's pretty complicated stuff, right? You can't make that into a bite-sized CNBC clip because it's just, what are they talking about? It's too in-depth. So I kind of feel like they're just going to continue to market to potential customers and nobody else. I think that's the right thing to do. I mean, as an investor, isn't that what you want people to do for you?
Yeah, exactly. Well, I think this is a good place to wrap it up. I've really enjoyed this discussion. We've been going for an hour at this point. I think maybe one more topic that we could use to close it off is we don't know when S&P 500 inclusion is going to happen. It could be next quarter or it could be the quarter after, but I'm just wondering, as we wrap up here, do you think S&P 500 is going to be a turning point that starts to realize a bit more of a long-term thinking and thought process in the stock from an institutional perspective, given, increased ownership and Palantir gets into the index or anything like that, and maybe people start to, I wouldn't say understand the story better, because I think anyone can make the case for Palantir. It's just a matter of, do you want to hold it for an extended period of time and such that you don't care as much for those drawdowns that we talked about at the beginning? So I'm just interested to know, because Palantir, for the longest time has been dominated by a retail investor base. And if that continues to change, I think it might deter a little bit of those massive fluctuations if there's if there's more institutional holdings. And at the same time, that's what people said about Tesla when they got inducted. And that certainly has not been proven correct. And when they were added in 2020, I think, to the S&P, and that certainly didn't stop them from falling 75% in 2022 or whatever it was.
True.
So
Maybe it
yeah,
would have
just
fallen 90% without the institutions. I mean, you don't know, do you?
it's possible. It's possible. But yeah, yeah, Felix, what do you think about S&P potentially?
I mean, I think timing is a hard thing to read. The S&P is a private company. So it's, or it's a listed company, but it's, you know, they can do it whenever they feel like it. They made, I think Tesla wait 8 months or something. Looks like they're going to make Palantir wait a little longer. No real, I mean, they're qualified. They've checked all the boxes, but yeah, we don't have a fixed date on that. I think it'll be exactly what you said. I think it'll reduce the volatility somewhat, and maybe it'll still be a volatile stock, but by having, how many investors have to track the S&P? So many pension funds and, you know, so many institutions have to do that. So they will just have to buy a piece of Palantir. Nothing they can do about it. Therefore, it reduces volatility somewhat. It also brings in the ETF money, the tracker funds, which I mean, ETFs to some extent can make drawdowns worse because they have to sell. You know, they are automatically triggered. They don't have the luxury of a pension fund's ideal because they don't have to do anything. They can sit on it for another 10 years. But those kind of tracker funds can actually bring you more volatility. Like Bitcoin now, right? All that Bitcoin money is running in, but when it comes down, they also all have to sell at the same time, and then who's going to buy it? So it's the same story. So I don't think it'll massively change it, but it'll bring in some money. That'll be good. It'll be a little bit more supportive, and it's a seal of approval. You're no longer a crazy growth stock. You are now an S&P 500 stock. You are a profitable top 500 US listed business.
Yeah, and I'm just surprised that it happened this, you know, quick, I would say, because, you know, 2020 to now, it hasn't even been 4 years that they've been listed, like 3.5. And I think that's a remarkable achievement, unprofitable to potentially in a 4-year time span, being in the S&P 500, which is no easy feat. And I think
I wonder if the S&P is making them wait, because some of those quarters, the only reason Palantir was profitable was because there was investment income.
Yeah,
so
I do think.
Which, okay, technically, yeah, you check the box. But if you were the S&P and you had another candidate, you'd probably use the other candidate. So maybe they're going to make them sweat a little bit longer. The last quarter was real profit, I believe. But the ones before that, I think, were all investment income.
Yeah, it's funny. Yeah, go ahead, Arny.
No, as I mentioned, the criteria under which a company enters are not fully disclosed, apart from those fully disclosed. So once you exceed some thresholds, you are eligible, but from eligibility to selection, those criteria are not fully disclosed. So there is a lot of discretionality, and we can assume that behind these criteria, there is a component of, okay, you need to be profitable, but let me check how sustainably profitable you are in terms of operations. And it is truly important to have like a consistent story of your business is structurally profitable. You didn't make profits only because you had the interest income. That's probably also why Tesla took a little bit of time, because yes, now you're making profits, but are your profits actually always to stay profits? Or suddenly, like in 2 quarters, you're going to be deep negative just because market conditions change. So probably the criteria for them is stability in the profits from an operational perspective. As Jackson, as you said, now it is almost unbelievable. Now in 2024, we are here talking about S&P inclusion, which requires 4 months of accumulated profitability at least. While my initial expectations for Palantir were, oh, hopefully in 2025, we break even and we start becoming profitable. So for me, that is already a massive win. Obviously, that came at the cost of minor growth, but essentially they adapted to changing market conditions. So on the one side, yes, we could criticize, you promised us a 30% CAGR, and then you grow 20%. But on the flip side, once you achieve this maturity as a company with a lot of cash produced, GAAP profitability, the standing you have as a company is higher than a company that just grows much. Karp mentioned that this GAAP profitability was not only required by the market, by investors, but it was also required by customers. So since customers need to give you 10 million, 50 million, in some cases, even $100 million of deals, they need to be 110% sure you are not going to bankrupt, because at that point, you become a systemic risk for the company. So that seal of approval is truly important. Eventually, entering the S&P 500, it would have some effects on the stock, clearly, as Felix mentioned. Having an additional buyer is obviously beneficial for the stock, because if someone buys, it helps sustaining the stock. That's mathematical. But what's really important is the perception. Once you enter the list of the most respected 500 companies, which require to be profitable, sustainably profitable, at that point, Palantir can't be seen as, oh, this is a meme stock, or this is a cultish stock backed. Like, the problem was so far that you could even compare Palantir to GameStop. That was not only full, but from someone who didn't care at all of understanding what's behind, that was a natural association. And believe it or not, these natural associations have an impact in the mind of asset allocators, into clients. And once you are entering the S&P 500 for merits, for profits, sustainable profits, nobody can really tell you anything. So at that point, there would be nothing that makes Palantir inferior to a Salesforce, ServiceNow, these companies that are now 4x, 10x bigger. And Palantir can really become a competitor for this financial money that is around, because at that point, people would naturally make a comparison. Okay, let me check how strong ServiceNow really is compared to Palantir. Let me check how really strong Palantir is compared to ServiceNow, sorry, to Salesforce and so on. Let me compare how Palantir is weak or strong compared with Microsoft. And once you start having this process, the true value of the company could emerge. You have more research, theoretically more people trying to understand what's the real story behind it.
Yeah, I think you both make a great point about the interest earnings. And if you do a sensitivity on that, which I have not, but would be a great exercise to see if interest rates go to 2% or whatever, is Palantir still profitable in these past quarters where they've been, profitable based on that. And so I think that's exactly right. And my understanding of there's discretion beyond the listed criteria. And like you were both saying, if Palantir's profitable, that doesn't necessarily mean they're getting in instantly. And as they were talking about on the conference calls, they were like, oh, we're eligible. But of course they don't have control over when they enter. And so I think it is important to understand that it might not be time just yet, but I think it's an inevitability. Might not happen next quarter either, but I would be surprised if they don't get in by 2025 is over. But that's just what I'm thinking at this point. Felix, please tell everyone where they can find you for more of your Palantir analysis.
That was very kind of you, Jackson. First of all, thanks very much for hosting us here. I really appreciate it. Really interesting conversation. I think Arny made some really great points there just at the end. So really, I'm glad we continued for a little while. Felix and Friends to search for on YouTube. If you wish to tune in, you might otherwise find me criticizing one of Jackson's videos viciously. I did the other day. But no, seriously, love you guys. Also, obviously, X is amazing. I know you guys are both very active on that, more than me. So give these guys a follow, and you will find I think there's a really, really cool community over on X as well, on Palantir, with some really, really deep insight. So thanks again, Jackson.
Yeah, appreciate it, Felix. And Arny.
Thanks for having me here. I'm mainly active on X, Arny. I also have palantirbullets.com, which is a weekly recap to stay updated on the information that matters, that could help us really spot the asymmetry between what the narrative is compared with the actual insights, the small little hints that we receive from X, from employees, from LinkedIn. So all the kind of information that make us retail investors more informed than Wall Street analysts that just wait for a Bloomberg press release to actually look what happened. And just recently, I'm returning back to YouTube.